안녕하세요. 다들 좋은 한 주 보내고 계신가요? 자, 미국 경제 아직도 불안한 요소들이 많은데도 불구하고 주식시장이며 가상화폐 시장이 오르고 있어서 불안하신 분들이 계실 거라는 생각이 듭니다. 하지만 현재 크게 오른 주식들을 팔아야 할지 들고 있어야 할지 고민하시는 분들도 많으실 텐데요. 주식 공부를 하다 보면 주식이 올랐을 경우 주식을 팔아야만 수익이 나는 것이 아니라 보유하고 있는 주식을 단 한 주도 팔지 않고 오르는 모멘텀을 이용해서 프리미엄 수익을 크게 챙기는 방법이 있습니다. 자, 여기 보시듯이 주식을 단 한 주도 팔지 않고 들고 있으면서 수익을 낸 경우를 볼 수 있습니다. 자, 저희 페이트리온 서비스 멤버분들과 이런 커버콜들을 나누고 있고, 작년부터 지금까지 제가 실제로 했던 커버콜들을 한 개의 컨트랙트만 커버콜을 했다고 가정했을 때 표를 만들어서 나누고 있는데요. 단 한 개의 컨트랙트만 커버콜을 했었어도 주식을 단 한 주도 팔지 않고 오르는 마켓의 모멘텀을 이용해서 작년에 3만 불 이상의 수익을 냈고요. 커버콜을 배우신 멤버분들께서도 작년처럼 크게 오르는 마켓에 주식을 단 한 주도 팔지 않고 커버콜을 통해서 프리미엄 수익을 한 번에 1000불 단위로 버신 분들이 많아졌습니다. 이 외에도 차트 분석을 통해 매수 매도 트레이드도 나누고 있는데요. 제가 했던 트레이드를 100주씩만 했다고 가정했을 때 작년에 14,000불 정도의 수익을 냈고요. 매주 월요일에 그 주에 트레이딩하기 좋게 세팅된 주식 리스트들을 나누고 있습니다. 자, 마켓의 중요한 인사이트들도 매일매일 나누고 있고요. 줌 미팅도 진행을 하고 있는데요. 지금처럼 불안한 마켓에 함께 인사이트와 전략들을 나누어서 후에 큰 수익을 나는 투자를 같이 했으면 좋겠습니다. 자, 함께하고 싶으신 분들께서는 아래 디스크립션에 페이트리온 서비스 링크를 클릭하셔서 줌 미팅 때 직접 뵙고 인사를 드렸으면 좋겠습니다. 자, 오늘은 투자와 트레이드를 무려 40년 이상 하시고 닷컴 버블을 비롯해서 2008년, 2009년 Great Financial Crisis도 경험하신 전문가 탑 홀츠로부터 2024년 마켓의 전망과 인사이트들을 들어볼 예정인데요. 여러분들께서 투자하시는데 분명히 큰 도움이 될 거라는 생각이 듭니다. 자, 역시나 인터뷰가 생각보다 길어져서 두 편으로 나눠서 번역하고 편집을 했는데요. 2편까지 반드시 챙겨 들으셔서 올해 여러분들께서 투자하시는데 정말 도움이 되었으면 좋겠습니다. 자, 그러면 디스클레이머만 듣고 영상 바로 보도록 하겠습니다. 제가 만든 컨텐츠들은 어디까지나 정보 전달을 위한 영상들이기 때문에 절대 영상만 보시고 주식들을 매수 매도하지 마시기 바라고요. 본인 스스로 반드시 리서치를 더 하신 다음에 판단을 내리시기 바라겠습니다.
Hello, everyone. I hope you're all starting a great 2024 so far. I'm pretty sure that many investors are happy with the S&P 500 rallying more than 15% in the past 2-3 months. But on the other end, I'm sure some are worried about whether we will have a major pullback or even if we will have a recession soon. So in these situations, I thought it would be very helpful for my subscribers to hear from experts that have been very successful with their investments and have gone through several market crashes. So today I have the honor to speak with Todd Baba Hortz, Chief Market Strategist at babatrading.com, and I'm really excited to hear what he has to say about the market in 2024. So Todd, thank you very much for your time today, and it is really great to have you on the channel.
Andrew, it's great to be with you. It's my pleasure to be a part of your show.
All right, thank you. Now, a few months ago in 2023, the market was falling hard. And in the case of the S&P 500, the index even went under the 200 SMA at one point. But in the recent 2-3 months, the S&P 500 has rallied over 15%, which I think surprised a lot of investors, even for those that were expecting the Sienna rally. Now, we do know that the Fed came out and said that they are planning to cut the Fed fund rates more than, I guess, 3 times in 2024. And the CPI is coming down, although it's still, in my opinion, way higher than the 2%. But do you think the economy is actually recovering and we are starting a new long-term bull rally? Or do you think this is a major bull trap that may hurt a lot of retail investors?
I think this is a very dangerous market right now. I think when you look at the big picture, we did have a huge rally. In fact, the Nasdaq rallied about 25% for the fourth quarter of the year. We are extremely overbought in these conditions. However, you cannot get in front of the market and say, well, it's time, it's going to sell off. I do believe it's going to sell off. In fact, I will say, and I've said this for the last year almost, there's going to be a 50 to 60% haircut here at some point. But again, that doesn't mean it's today, and I'm not predicting that it's going to be today. And full disclosure, I'm always long equities anyways. I don't get out. I have a hedging program that I hedge my equities and I day trade. And right now my positions, as much as I am bearish emotionally, I'm still bullish the market based on the tape, based on the action that is being priced in here. I don't believe that the Fed is going to cut this year. I think that has been a big selling point and why the markets have been running. People believe that's going to happen, but Jerome Powell has never clearly come out and said that they're going to cut a number of times this year. He's talked about it. If he is correct that inflation is falling, which I don't believe it is, but if he's correct, what is the reasoning behind cutting rates? You look at the CPI, which you mentioned, the CPI only accounts for 4% of food and energy. Now, unless you have an emergency, I guarantee you the average American spends more than 4% for food and energy on their goods and services every month. So again, the CPI is a garbage number. It has absolutely no meaning. It is a government reported number, very similar to the jobs, which is not valued and always adjusted the next month out.
So you think we are already in a recession?
I think we've been in a recession for the last 6 or 7 or 8 months. Again,
Wow.
A market rally doesn't mean you're not in a recession. What it means in a recession is, can people afford to go out and eat? Can they afford to spend money? And maybe they are spending money, but who's really doing the spending? Okay, you go to the restaurant, you're not seeing the average American middle class in there. You're seeing the people have some dough, because people who have money are not affected by recessions. If you've got real liquid cash and real capital, recessions are actually a benefit to you. You get to take advantage of the recession and buy things at reduced prices. The average middle class, the working person who's making, I don't know what the right rate is today, but let's say $75,000 a year. They're not out spending. They're lucky that they can pay their bills right now.
So this is something I'm really interested to hear from you. But personally, I'm looking at, a lot of indicators of what's happening in the economy, not the stock market. And what I see personally is that the credit card debt is the highest. And as you say, if the Fed fund rate keeps its high rate for quite some time, we have the commercial real estate debt refinancing coming. And I think the banks, the bonds, they bought a lot of bonds at a lower rate, the yield, and the banks are in trouble. And I heard that 70% of the loans for the commercial real estate are from regional banks, small banks.
Well, listen, so you've nailed the picture perfectly. There's never been a time in history when more families had at least one credit card at limit than ever. The emergency lending window, which is the Federal Reserve, the emergency lending rate, has never been more crowded with banks borrowing money from the Federal Reserve. So now we've got banks that are over leveraged. We've got the consumer that's over leveraged. We've got interest rates that are rising. And the entire economy is out of control, which can only lead to one thing when it's all said and done. It's got to lead to a market collapse. Now, again, the when is always the question. There are warning signs every single day. From the epic move we had in gold a few weeks ago, when it went up like $100 in a day, okay, to other little things that nobody pays attention to, because unfortunately, the average investor doesn't care about anything until it affects them directly. And when it affects them directly, by that time, it's already too late to act to what's going to happen.
So when you say affect them directly, I'm also looking at the massive layoffs and unemployment rate. And personally, what I think is, people are living on their credit card debt, right? Yeah. But they're living because they have a job and the paychecks coming in. But I see a lot of layoffs coming in. Like today, Amazon was cutting, a lot of employees as well. But if that happens, is that a major sign that you see that will affect?
I think that's already playing out. I mean, we've already seen them. How many times in your life, and you're pretty young, but how many times have you ever seen Amazon lay off during Christmas? Okay. Meta's already laid off a lot of employees. Google's laying off employees. Everybody's laying off employees because either they don't need them or they don't have the business to support them. We've lost the commercial real estate market, which you're talking about coming up for lending. Who goes to the office anymore? How many people go into the major cities to go to work anymore? It doesn't happen. But again, until it comes and it affects your pocketbook and it affects your family, you're not really looking at it, because if you're looking at what's going on in the economy, you should be storing your nuts. You should be putting your money away and not out spending at restaurants, because the storm has not even started yet, and you can already see a lot of problems out there.
How would you explain the economy? I kind of understand what you're saying about the economy, and I totally agree. But how can you explain the market going up so high? Is it hype, or is it just expectation, optimism?
Well, it's a little bit of everything. Remember, first of all, markets are predisposed to go higher anyways. They go up on average 8.5% year over year since the history of the beginning of time. Okay, number one. Number two, there's an overwhelming amount of money in the money supply. The government or the Fed has created so much money that's out there, it's got to go somewhere. So it's going to go into the market. So between IRAs, 401ks, and companies that are putting money in, they're going to feed the market. And what we really have here is we have a lack of participation. Take a look at the volume compared to historical volume. We're at about 50% of normal. So right now you have buyers buying without the participation of sellers. I would suggest, in my opinion, is that the sellers are going to show up, and the sellers will show up in the form of Goldman Sachs, JP Morgan, the big guys when they're ready. But right now, it's kind of like a boxer in a match. Carry the guy for a couple of rounds so you can put on a good show, and then we're going to knock him out. And I think that's exactly what's going to happen in this economy. They're going to carry the economy for a while. They're going to continue to let it go higher. And then bang, one day you're going to walk in and they're going to start selling it. And people are going to go, wait a second, I can just buy the dip. That's all I've ever done. Okay. And they're going to sell a little further. And then, of course, we go into the pandemonium. And of course, the fear strikes out. And then everybody pukes it out to the bottom. And then you get the reverse rally later. But that's the way I would see it. So just because the markets are going up doesn't mean that we're not in a recessionary time. It doesn't mean that there isn't problems because, again, they're not necessarily correlating today.
The other thing that I think will be very helpful is I'm pretty sure that the majority of investors that are watching this video has not gone through an actual major recession. Even for myself, I haven't gone through 08 or 09. But can you share if you felt this optimism or hype or melt up before the dot-com bubble or the great financial crisis? And do you kind of somewhat feel the similarity that we're seeing right now compared to right before the past recession?
I would call this almost exactly the same scenario. Again, nothing is exactly the same, but to me, this is like the exact same scenario. I mean, people are buying like they can never go down. I mean, I did.
조금이라도 도움이 되셨다면 주위 분들과 나눠주셨으면 너무 고맙겠고요. 구독과 라이크를 해주시면 더욱 감사하겠습니다.